is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. It is Wednesday, November 6th, and Donald Trump has been reelected as the 47th president of the United States. Republicans also flipped the Senate and held on to their House majority. So whether you like it or not, the result and the message is pretty clear. Americans delivered Trump the mandate to govern and to enact his agenda. Now, we've talked a little bit about the Trump trade on this show, and admittedly, according to our analysis, it's been fairly muted in the lead up to the election. It's true that Trump media and technology was correlated to Trump's odds, and Bitcoin exhibited a modest statistical relationship, but generally speaking, it was pretty low. If traders were cautious, though, going into the election, they got over that pretty quickly, as it became very clear last night that Trump was cruising to an easy victory. Bitcoin surged and hasn't really stopped surging since it started to move. The dollar gained the most in years. Bonds slumped, stock futures popped, and even gold was down 3% as people sold safe haven assets. Today, as of recording, many crypto stocks are up more than 20%, which is quite remarkable for any company, especially companies that have market caps in the billions and billions of dollars. So in other words, the assets in the Trump basket have basically performed as one might have expected. And that has everybody kind of looking to the future to see what exactly a Trump administration is going to look like for crypto, and also examining his strategy on how he was able to motivate the industry and galvanize some of its more disaffected voters into his camp, along with a lot of other people, apparently. According to the data, 90% of counties in the U.S. swung more to Trump than to Harris, which to me indicates pretty broad support. So, Andrew, I know that you've been on this for a long time and had anticipated that Trump was going to win. So tell me, what's your initial reaction to the news?
Yeah, I mean, I think it looks like the shy Trump voter is once again the sort of story of the election. Trump ended up beating his national polls by about one point. Harris yesterday morning was 0.1% ahead. Looks like Trump's going to take the popular vote by about 1%, maybe 1.1%. And then obviously even more so in the swing states, particularly Georgia and North Carolina. We obviously got a really good indication, I guess, early on that things were not going well for the Democrats. And yeah, I guess kind of the surprise was that it wasn't close at all, really. The election was effectively over by well before midnight. I would say even by like 10 p.m.
Yeah.
So I think that's like kind of like one thing. We obviously have been talking a lot on the podcast about that, how we sort of were bullish Trump winning, as well as his impact on crypto. We saw that immediately, obviously. In a lot of ways, crypto kind of called the election. So sort of well before even the first swing state had been called, Bitcoin had a couple huge green candles and hit $75,000, which to a lot of people who are sort of watching the prediction markets and watching the election, who also are in crypto, it was kind of a clear sign that the market had spoken. So I think that was quite interesting as well. Yeah, I think like overall, it's kind of the return of animal spirits. I think one of the things it's almost like an immediate vibe shift within the crypto industry that essentially politics and the regulatory front is now going to be a tailwind instead of a massive headwind. And so you're obviously seeing an immediate repricing in crypto. Where you're seeing the biggest repricing is actually in a lot of the old DeFi coins that don't yet have effectively value sharing with their token investors. So there's a ton of crypto networks that generate a ton of value, provide a lot of value, but currently don't capture any of that value, nor do they sort of distribute that value to token holders.
Or if they capture it, they don't distribute it. And maybe one of the reasons is because of a lack of regulatory clarity, right?
Exactly. And this particularly impacts US-based teams. So overnight, some of the biggest gainers were Aave, Uniswap, some of these, some of these coins that have been, to a certain extent, maybe not Aave, but a lot of these coins have been quite beaten down over the last year on a relative basis. You know what I mean? Like a lot of these DeFi coins that have just been way outperformed by, the shiny new meme coins and some layer ones. So it's nice to see like a pickup in DeFi. A lot of these things look quite, on a relative valuation basis, look quite attractive. Their coins are fully distributed. It's like kind of the opposite of the high FDV, low float that you see in a lot of these new layer ones. Most of these coins are at this point 100% distributed, invested. So yeah, I mean, I think one of the big narratives you'll probably start to see is a lot of people calling for the return to utility or return to value. So
yeah.
The only thing though is a lot of the biggest gainers yesterday were actually meme coins. So I don't know.
Yeah,
we're sort of seeing
return to value. I think that I saw some people online kind of parsing this out. It's like now that there's clarity, there may be a return to some of these protocols and applications that capture value. They now can distribute it. But a lot of these meme stocks have done just as well. And you got to wonder if it's just like a rising tide is going to lift all boats thing, right? Like, you and I have been through a couple cycles, like 2020, 21 was kind of indiscriminate, right? Everything kind of went up and things that were better quality stayed higher than the other things. But generally speaking, you do see this return of animal spirits, as you said. I want to go to the election specifically and to the things that changed this year and how this election, I think, was so different. So, Warren Buffett once said that the market in the short term is a voting machine and in the long term, it's a weighing machine. But thanks to the rise of prediction markets, and because crypto is a 24/7, 365 market, the market is a weighing and voting machine at the exact same time, right? Like there's no difference between these two things. You can see this playing out in real time. And you're absolutely right that, look, like people were not pricing in a Trump victory at 7 p.m., but all the data was suggesting that she was doing worse in certain places and that, you could extrapolate from there that the likelihood was higher. And so people start placing bets. That's what they do. They're weighing the odds. They're trying to determine whether or not there's positive EV in this situation. And if they think that there's edge, then they're going to do it, right? And so you could see the prediction markets really front running the news channels, front running the prognostications, all the legacy media. And, a lot of people would say that, oh, that's because the legacy media is in the bag for the Democrats. And I just think it's different. Like, I just think that they're metabolizing information slower and they're not moving and pricing things as efficiently as the market is. That's what was happening. So we're very lucky to have a great guest who's just joined the show, Brandon Potts, who's a partner at Framework Ventures. So Brandon has been an active researcher and investor in the crypto ecosystem ever since discovering Ethereum back in 2015. With a background in structural engineering, he was head of business development at onchain.ai, a blockchain intelligence platform for security, risk, compliance, and then chief of staff at Startup Sandbox, which is a bioscience incubator affiliated with the University of California. Since joining Framework in 2021, he's led over $70 million in core investments into DeFi, gaming, AI security, and infrastructure. He's also got a point of view on what's going on in the world, the impact of the election, what we can expect from a new administration. So we're really excited to have Brandon on the show to jump right into it. Brandon, thanks for joining us.
Yeah, good morning, gentlemen. Thank you so much for having me on. It's a pleasure to be here, calling in from sunny San Francisco. It's a nice day here today, and obviously everyone's talking about the election, so happy to get right into it wherever you see fit.
Well, let's pivot maybe a little bit and talk about what to expect from a new administration. So I know that a lot of people in the industry have high hopes for what a new administration can bring. Andrew mentioned that, he was bullish on Trump's odds and thought that Trump would be good for the industry. I've actually sort of long maintained that no matter who won, there was going to be a positive vibe shift, that we were going to leave behind a very troubling period and then move to something better. But it does seem as if under a Trump administration, some of these things on the wish list could come true. So I'm just going to highlight some of the things that I've heard. Number one is a change at the top of the SEC. Number two is a change within the Senate Banking Committee now that Sherrod Brown has been defeated by Bernie Moreno in Ohio. Potential stablecoin legislation, the opening up of public equity markets with more IPOs, staking and ETH ETFs, more crypto ETFs, basically securing Bitcoin's future in the United States, including changes or protections for energy usage, adding Bitcoin as a strategic reserve, no tax on crypto transactions. So, there's a fine line between vision and hallucination, and maybe some of these things are more attainable than others. But what do you think, just like big picture going forward, are some of the things that can actually be achieved, in the next couple of years?
I mean, look, I think it's interesting to step back and take recognition of the fact that essentially everything we've done to date has been operated in sort of a gray area as it relates to crypto in the United States. And so, frankly, just from a social perspective, getting clarification on, hey, this is a legitimate industry, there's a future here, there's a lot of potential. No longer are we trying to snuff it out, cancel it, sue it into sort of, relegation. I think that with Trump sort of in the lead now in all sorts of, flips in the Senate and Congress and just races throughout the country, the message is loud and clear that crypto is here to stay. And, many people on Twitter and across the industry are basically talking about, irrespective of your politics or whoever your candidate was, the clear message was that crypto won. And, I'm really proud of everyone who stepped up to the plate and essentially put their money where their mouth was and really got to work. And, Fair Shake and a number of other kind of efforts are really indicative of all of this. And Alex, you mentioned, a number of sort of those data points, but I think, right off the bat, the one that comes to mind most clearly for me is obviously Moreno taking over Sherrod Brown's seat in Ohio, where Fair Shake allocated, $40 million out of, I believe, $160 million PAC, explicitly for that one single race. And of course, Sherrod was, a key figure in kind of the Elizabeth Warren, choke point 2.0, let's cancel crypto, with, Gary Gensler being very much integral to that strategy and process as well. And so I think more often than not, when in markets they go from bad to less bad, that's where you get a lot of asymmetry rather. And then, of course, over time, things are generally going to improve. And let's be clear, regulation and all of these things are going to take time. But this is the watershed moment in terms of sentiment shift and basically the message getting, clearly distributed to everyone, especially politicians, that, hey, crypto puts their money where their mouth is. And politicians are constantly fundraising and, looking to what their constituents are excited and eager to participate in. And now crypto is consistently among the top issues. It's not something I would have foreseen, in the last election, for example, but to be here now and today and to get the right people in there. Yeah, I mean, it's super exciting and, happy to dive into any other, things we might want to talk about.
Well, you mentioned the Super PAC Fair Shake and the $160 million. And it's clear that industry resources were instrumental in a couple of these races. But without the support of voters, that kind of, influence can ring a little hollow. But it turns out that something like 25% of Gen Z and millennials already own crypto. And even before the election, over 1 million had signed, a petition that was advocating for candidates who were supportive of this industry. So this is something that had real grassroots support. And I don't know if it was decisive in any single race for or like in any part of the presidential race. Clearly, it was very important in the Senate race. But it's obvious that this is something, as you said, that matters to a lot of people. So going forward, you're right. It's completely sort of reset the relationship between how politicians think about this industry and the industry itself. I know Andrew has a bunch of questions, but one of the things that I've written about recently is that generally speaking, people tend to overstate the impact of politics and who's in power on markets. And that's been true for stocks, fixed income, throughout the ages. Markets are just as likely to perform well, stock markets, during Democrats, going back to the beginning of the markets. And yet this time does feel a little bit different because there does seem to be a very distinct, difference of opinion between the parties. Just how instrumental is this going to be in moving the market and helping to fully realize the value of Web3 compared to other factors, like, say, technological progress or the utility of existing applications or new apps or all the other things that people talk about?
I think it's hard to understate how important this is, frankly. Andrew, I heard you sort of mentioning this in a bit of the intro in terms of some of the incumbent DeFi blue chips kind of being re-rated or appreciating overnight. I think a large part of that is, frankly, institutions, enterprise, they've done their fair share of POCs and they've dipped their toes in the water, and maybe they've done a few other things, but they really haven't been able to interact with on-chain or the blockchain industry writ large in meaningful capacity. And even with the ETFs, which have done, extremely well to date in garnering AUM, they haven't been able to offer just basic things that we take for granted in the on-chain space, like staking for a proof of stake chain. I mean, very, very simple things. But nonetheless, I think the writing's on the wall that, look, institutions want to engage with this. And first and foremost, they need it to be legal. They need, guardrails up. They're not going to put at risk all of the business that they've done to date. They make so much money. They have so much distribution. They're essentially monopolies. Why put that at risk for a new kind of unclear industry that's still only at $2.5 trillion when you're processing, 10x that in nominal on a daily basis? So yeah, look, I think that frankly, a large part of why, DeFi to date hasn't scaled is just we have a lot of endogenous capital in crypto, and we're very good at cycling that around and kind of bootstrapping and experimenting and trying new things and kind of re-rating from there. But it's kind of that, exogenous or endogenous capital, the external to crypto capital, that's really going to set this, industry up for future movement. And I think a large part of that comes from institutions, whether that's on an integration standpoint, and then they offer it to their end users, or they themselves are, say, putting it on their balance sheet or running something on chain. I think the menu of options is rather wide there. But, whichever avenue you want to explore, the fact is they need to do this in a legal manner. And so, obviously when you're electing politicians and, the folks setting the legislative agenda, the expectation is for them to basically enable them in a fair way to do so. And that's what I mean by, obviously that process will take time. That's not going to change immediately overnight. But what is clear is that more, crypto friendly people are going to be on those key committees, allocating budget, deciding the verbiage in these bills. And ultimately that's going to come out on the other side of things in a positive light for crypto.
So speaking more, just to get a little bit more granular, are there specific sort of subsectors of the crypto asset class that you're particularly bullish on with Trump winning? Like I think, like just as an example, some people are pointing to potential further outperformance for Solana, for example, because if we have a easier regulatory environment that lowers some of the regulatory risk for Solana, also makes it potentially more likely that they get both a futures and sort of ETF launch as well. And so that could be kind of seen as like a relative value trade in favor of Solana over something like ETH or Bitcoin, which already obviously have their own ETFs. Another example would be kind of like how meme coins, this could be on a relative basis somewhat bearish meme coins, because meme coins have been kind of to a certain extent seen as like a way to get around securities laws. Again, for some people, because it's like a way to launch a coin somewhat legally. I guess, is there certain sort of subsectors that you think are particularly impacted favorably from this?
Yeah, it's a good question. And, in terms of market commentary, I can't provide specifics on certain things, of course, but look, I think there's sort of two ways to cut it. One of which is, I was kind of alluding to it previously in terms of institutional capital flows. And I think that's what you were hinting at, Andrew, as you mentioned, maybe additional, longer tail assets get included in baskets or ETFs or just, additional vehicles and become investable, for the writ large kind of asset allocation industry. I think that's certainly on the table. And I think that you're going to see, an appreciation and sort of what maybe, the catch-up trade if Bitcoin decides to rip up over 100K here in short order. Obviously, the entire asset sector is going to reweight itself, and folks are going to be placing bets in longer and longer tail assets being included in those vehicles and capturing, those $1 trillion plus flows. And so that's one element to certainly appreciate. But yeah, look, I think the other end of it too is just kind of, the end all be all, which is utility. I'm not going to get into like meme coins and their utility or not, but like, let's face it, it's on-chain culture. It's fun. It's captured, the zeitgeist and the attention of folks who frankly just want to get in there and have fun and speculate and kind of play this PvP game. And that's fine. That's generally what markets are best at. So it's kind of, markets at their bare core. But look, when new assets come out and they actually have utility, they have growth, they have traction, they kind of have, mind share, whether or not you're underwriting utility in any of sort of those categories, or you just frankly enjoy the product itself. I think as this industry matures and appreciates, you're going to be wanting to underwrite that which just has the best either utility now and or future utility. And how the market underwrites future utility is anyone's guess. People are looking at all sorts of factors. I mean, all you have to do is look over the fence at our cousins over in the AI space and appreciate that, some of them, are still losing money and they're not even generating any revenue thus far. And yet they're already reaching, unicorn-like outcomes in terms of private market valuations. Is that sustainable? I have people on both sides of the camp who argue yes, some argue no, but nonetheless, there's a healthy market there. And so I'm excited to see that sort of market dynamism be applied to a further, kind of widening of crypto assets versus right now just kind of either the majors or these long tail meme coins. It does feel to me like the hollowing out of kind of the core assets has kind of run its course. And I think one of the areas we're going to see that be re-rated or corrected most rapidly is sort of in the DeFi blue chips, who are spitting off all sorts of revenue. And it's pretty easy to underwrite from kind of your basic PE models. And that's something that the traditional kind of financial industry, that's their bread and butter. So I think once they come in and A, have the green light to do it from a legal perspective, their bosses, their C-suite have signed off, and then B, they can just kind of sink their teeth into the data itself, they're going to feel pretty comfortable buying some of those sort of, middle maybe of the bell curve assets or however you want to frame it. But look, I think there's many kind of ways to skin it here, but those are some that I would highlight.
It's very interesting. I think you've mentioned two different types of capital flow and interest. One is institutional investors and the other is enterprises. And I think that the institutional investor story is one that is well understood, right? We've seen how the Bitcoin ETFs have driven huge capital accumulation, both from self-directed retail and institutional investors. And if investors have comfort on these other names, they might do the same thing. But I think that point you made earlier about enterprises is maybe less well understood. And you see these surveys, like Coinbase did some research that showed that half of all Fortune 100 companies have a Web3 strategy or project underway. When you peel back a layer, you'll quickly find that in many cases, the interest level is totally sincere, and they may have lots of smart people working on that. But there's nothing, for by and large, they're not yet commercialized. And I think historically the criticism has been that the technology is maybe not ready for prime time. You'd mentioned that some of these banks and payment processors are doing orders of magnitude more than the whole market cap on a daily basis. But a lot of it is also regulatory uncertainty. If you're a big company and you're planning for the long run, making investments that should pay off in multiple years, you need to know that the rules are going to remain constant over time in order to actually make that allocation, to make that investment. And so I do think a lot about examples of Web3 applications outside of financial services and how big companies may become more comfortable with holding crypto in inventory as part of their business operations, right? They may find that if they're doing something in DePIN on Solana, they need to own Sol and stake it or something like that. And similarly with ETH. And maybe that until now has been they've been a little bit wary to do that. So I'd love to just, drilling down on use cases and on themes, not so much which ones are going to perform well as investments, but are there any aspects of Web3 that you think will be accelerated or unleashed in a more hospitable environment? And to what extent would you say is that going to be driven by this growing comfort from enterprise?
Yeah, Enterprise is certainly one element to it. I think, not to sound too broad or generalist, but I think there isn't a category that suffers in crypto from all of this improved kind of regulation and political stuff. And I think, maybe just to double click in enterprise for a moment, obviously there's a bunch of talk about them just starting out with having crypto on their balance sheet. I think that's a nice, easy entry point for treasury diversification. They can make sort of the financial case, et cetera, et cetera. But from there, obviously, I think it's anyone's guess as to how they implement or incorporate things on chain. To your point, Alex, a lot of kind of friction to date has been that just the scalability hasn't been there for them to kind of process their daily workloads, sort of an on-chain capacity. But look at all of the work that's happening, the broader, not just L2 and Ethereum, but just scaling writ large across the industry space. And it's basically it's a bunch of, batching, aggregating, compression, fancy cryptography. We don't have to get into all the specifics, but suffice it to say, there's an entire industry hard at work at making scalability, kind of an afterthought. And then the other element to it is frankly privacy. A lot of these on-chain supply chains are kind of the complete and total opposite of black box on-prem sort of software to date inside enterprise, where they just want it all sort of within their own environment, their own instances, their own racks. Maybe they have some cloud. Frankly, they don't know exactly whose data they have and where it is and who has access to it. That's basically the entire cybersecurity industry. And so I think the element where they want to funnel some of that to on-chain is just scary for them from kind of a liability perspective, B, from a security perspective, but then C, just privacy as well. And privacy is a fast moving area as well that, frankly, out here in California, in my opinion, they're kind of leading the charge on all sorts of legislation for better and for worse. But in any case, enterprise is very cognizant of that. And so I think that's sort of the friction point for them to get involved. But look, all those areas are being addressed, and that'll continue. But I think the broader kind of question you're asking is like, maybe what are some of the sectors that are poised to appreciate or kind of get lifeblood? I think one of the areas
not just appreciate, but also to become more useful, more widely used, right? Like I think about DPIN, for example, or on-chain gaming. I think that, as an example, people are already spending tens of billions of dollars on assets that they buy, but they don't own, right? Because they don't have ownership rights to them, whether it's in-game assets or, other virtual goods. And, it would be great if when you play not just Web3 games, but, really big, rich games, Fortnite or, Call of Duty, all these assets you're already buying, if you could own them, trade them, have them appreciate in value. But I feel like that is an example where, the opportunity, the utility of digital goods runs up against the limit of the law, right? And I'm not saying that, we're going to get solutions to every single one of these things where it's unclear, but that to me is an example where, like if we can imagine a world where, you earn an asset in a game, you can take it with you out of that game, sell it, use it somewhere else. That's something that could unleash huge utility in gaming, for example, right? Or DPIN, or like any of these other areas. So I'm wondering about utility and how, maybe the unburdened or unleashed, you could see more of it.
Yeah, no, I think you kind of have touched on it a bit. I'm super optimistic on essentially anything that would want a mobile endpoint or, a mobile phone user. And in my opinion, the most pertinent category in that realm is gaming. It's certainly DPIN as well. And I think there's some net new use cases. But, when you look at the industry today, a lot of it's been browser-based, kind of, whale-driven, especially in DeFi. But as we look to get further and further distribution and just generally get more mainstream adoption, we need to meet users where they're at. And look at everyone walking around on their phones. I mean, we're essentially cyborgs looking at our phones all day, myself included. But look, I think gaming has a huge unlock if all of a sudden, rather than these progressive web apps, which are cool, don't get me wrong, look, it's just such a better experience to have a native app store installation process with, all the normal like passkey, face touch, whatever, things that people are used to. So look, once you're able to allow users to just natively download apps and have all of their payment software like already embedded into the process, they can use Apple Pay. Like, it's just such a huge unlock. Imagine the entire world is 2 clicks away on their phone from accessing something that's on chain, whether it be a game, or maybe they want to participate in a DePIN, or maybe they want to do something social. We really have not had that opportunity to date. And so, my hope is that as this new regime moves into place, obviously companies like Apple and Google and really the gatekeepers to so many of these distribution points recognize the writing on the wall and look to capture some form of that revenue by servicing it, rather than cordoning it off and kind of making it, again, kind of a gray area. So yeah, super excited about gaming. I mean, look at just frankly any mobile gaming statistics worldwide and look at some of the on-chain games to date that are predominantly played by emerging market players and users. And the raw ingredients are there for an outstanding success once those two come together.
Well said. I love the way you summarized that. Yeah, that was a great take. Brandon, this has been a great discussion. Thanks so much for joining us. We don't want to speculate too much about what the future holds. As they say, the best way to predict the future is to build it. And I know you guys are funding a lot of these builders. As you said, the high conviction, high integrity founders that have the long view. That was really well said. So we look forward to staying in touch, following your progress, and would love to have you back on the show. But before we conclude, where can people learn more about you, follow your work, and Framework Ventures too?
Yeah, well, thank you both for having me on. I enjoyed the conversation. You can find me on Twitter, LinkedIn, you name it. On Twitter, I'm B_Potts23, and similar username on just about everything. So look forward to seeing you in my inboxes.
All right, thanks. Well, that's it for DeFi Decoded this week. I'm Alex Tapscott here with Andrew Young. Check us out on Spotify, YouTube, wherever you get your podcasts. Make sure to leave a review and a rating. It helps other people find the show. Until next time, take care. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.